Now more than ever, you need technology you can rely on.
頼れる人ですよね。
I'm a Dell Technologies advisor.
Ich auch.
我也是。
我aussi.
And if you're a small business, we're with you.
We are with you.
Estamos com você.
We want to help.
So we'll be right here.
At home, answering your calls, providing support,
And standing by you every step of the way.
Bye-bye.
Hi, so we have a great panel starting. It's called Accelerating Digital Transformation, and it's the Fintech panel that will be starting in just a moment here. You can see our great panelists. We have a really exciting session that will be starting very shortly. Our moderator is Daniela Barbosa. She's the VP of Worldwide Alliances at Hyperledger, which is part of the Linux Foundation. And actually Daniela is a good friend, and actually most of the panelists are good friends and are been in the blockchain space for quite a few years. We have mostly startups, and newer projects. So if you're a fan of startups, this is going to be a great session. Let me just give a brief intro to Daniela, and then I'll hand it off to Daniela in order to kick off the panel. So like I mentioned, Daniela is Vice President of the Worldwide Alliances for Hyperledger, which is part of the Linux Foundation. She is responsible for the full lifecycle management of Hyperledger's membership community, and she also oversees the broader industry and business community outreach and also network growth. She has developed and led growth and innovation strategies for more than 18 years, so she's really a veteran. This isn't her first time. And she has a background working with financial services, media, enterprise software, as well as digital identity. And so with that, I'd like to hand it off to Daniela so she can get us kicked off. It's all yours. Take the floor, Daniela.
Wonderful. Thank you, Jordan, and thank you for the opportunity to speak at TiEcon. This is my third TiEcon event that I'm participating in, and it's always fantastic to participate and to network with the community. There's a lot of fantastic work going on that we always appreciate. This session obviously is virtual, but we do hope that in the near future we'll see everybody in person again. But it's nice to see everyone's face here, and I've been watching some of the other sessions as well, so thanks again, and great work from a TiEcon for creating these events. As Jordan said, I'm the Vice President of Worldwide Alliances at Hyperledger, which is a Linux Foundation project. We're one of about 50 top open source projects that the Linux Foundation hosts and supports worldwide. Today, from a Hyperledger perspective, we have thousands of companies building networks using Hyperledger. And we can already count hundreds of production networks using Hyperledger open source code across various industries, from production networks like WeTrade in the trade finance, Food Trust, which is in supply chain that is really backed by IBM and Walmart, and many others in healthcare, public sector, and certainly in identity. And we're going to learn a little bit about that today also from CU Ledger as well as others. Myself and my team globally have the privilege of working with innovators, small companies, big companies, individuals who are working on essentially these topics that we're going to be discussing today. So I'm super happy to be moderating today's panel as well. So the topic of the panel is acceleration from digital transformation. For the last 5 years, financial service industry has certainly been going through a digital transformation with many in-person services, from consumers going to physical banks to critical back office services and work that is very regulated. And a lot of that work is moving online, not just in financial institutions, but across the different parts of the economy and production that touch financial services and banks. Many of the technologies I will be be discussing today. In the past, even last year, we're seen as emerging tech in banks and in large companies, often sitting in R&D and innovation departments, with a team of 20, a 30, or 40, depending on how big the company was, working on these innovations. But the fact is that, as our panel is going to share light on this, is that today these technologies, anything from blockchain to artificial intelligence, have been worked on, have been architected, have been designed for the dynamic world that we live in. And we're going to touch upon that on today's panel. So today's keys for the talk is going to focus on digital transformation, financial services. Some key things you want to think about are questions around identity, the move to digital and why it's different this time. And we truly believe because of the times that we live in, because of COVID-19, but also because of what is happening worldwide with societal changes and government changes, that the move to digital is certainly digital. And all of us who are technologists are looking forward to taking advantage of that and moving a lot of the work that we've done for a long time. The other thing is regulation and the appetite for change. Is the issues of regulation constantly being touched upon? Are we ready for the change? Are the government entities? And last, we just finished listening to Danelle's presentation around financial inclusion. There is a movement worldwide and things that we can learn from other parts of the world, even here in the United States, around the need for financial inclusion and how these technologies can match them. So very honored to introduce, and I'm going to let them introduce themselves, our panelists. First, we are going to start with Veena Gudavi. Veena, can you introduce yourself? Tell us a little bit about yourself, and also, when Jordan and the TiEcon team reached out to you, why did they do so?
Thank you, Daniela. Everyone, pleasure being on the TiEcon panel, and as always, exciting topics and smart people. So, definitely excited to be here to share some of the things that we're doing and also get perspectives of what's happening, with other companies here. I'm a CEO and CEO and founder of eMarja Corporation. eMarja, we focus primarily on digital finance, for enterprises, and we primarily focus around order to cash side of the business, accelerating order to cash cycles using digital technologies, AI, blockchain, and cloud, and creating disruption to accelerate these cycles with the touchless transactions and self-operating processes. That's what we do, and excited to be part of this panel to share how we see our customers as well as the market using these technologies to optimize what we call as the working capital cycles, and and creating some new paradigms and competitive edges for companies.
Great, excellent. We're looking forward to it, Veena. Ayo, can you give us a little overview of your role and what Bolt Labs is working on?
Yeah, thank you, Daniela. Really glad to be here talking about what we do. But a little bit about me. I'm Ayo Akinyele, CEO and co-founder at Bolt Labs. Our mission really is privacy and making sure that privacy infrastructure is built into public blockchains so that things that we build on top have the option of turning on privacy in a usable way. My background is in cryptography and computer science. I've been in the crypto space for about 10 years, dabbled into starting a company and focusing on privacy a couple years ago, but I've kind of been watching the evolution of people becoming more comfortable with digital payments, and the glaring problem that I see, which is that not enough people are talking about why we should care about privacy in the context of how these systems get deployed on top of a public blockchain. And so our core technology really is called ZK channels. It's a second layer protocol that uses zero knowledge proofs to provide scalability and privacy for public blockchains. And so why I'm here, from talking to Jordan, it was clear that I think our message around why we need more privacy as we accelerate digital transformation was something that that would be worth diving into as part of this panel.
Welcome. Daryl?
I'm Daryl O'Donnell. I'm the Chief Technology Officer for a kind of a strange startup called CU Ledger. CU Ledger is owned and funded solely by the credit union industry, largely speaking from the States. We do have a global mission. We came out of an interesting lab, as Danielle, you indicated, blockchain was in the lab for the past many years. But in 2016-17, the credit unions looked around and said, this blockchain thing, we're not quite sure what it is, but it sounds like it could have an impact. So for a couple of years, the credit unions were funding projects to understand what could it do for the global credit union industry. Our mandate is global. The focus right now is on the United States. And we realized in order to do loans, payments, deeper finance, small business, large business, personal accounts, underneath it all, there was one fundamental problem with all of the IT systems that we've been using. And that is that we've tied ourselves in knots trying to get personal digital identity figured out. So what we did was we laid down a foundational layer that is focused primarily on digital identity. We've got that going. It's in production now. We actually have a credit union just went live in the past couple of days. They're just enrolling several hundred members right now. They've already gone through live production pilots. So what we're finding, though, is that people are adopting this identity because it's far faster, far simpler, and a lot more secure. But yeah, it's for the credit unions, globally speaking, but again, the focus right now is on the US.
Great. And Moses?
Hi, thanks, Danielle. My name is Moses Kusisura, and I'm the CEO and co-founder of Social Media Gateways, Inc. And we've developed a couple of platforms, and one of the platforms is called Snap. And basically, Snap is marketing and analytics software that we've repurposed, and we're using it for financial inclusion, mainly in Africa. And the idea is really to be able to kind of like change, or not change, but add a way of remittance that is more trustworthy than what the situation is right now. The problem mostly in Africa is when the money is sent to people in Africa, it's not used for what it's meant for. So our product, we partnered with a Moduloop, which is Gates funded project, open source project. And we're building a platform that will split payments to small, mid-sized businesses across Africa, in one shot. So when somebody sends the money, for example, to their relative, instead of sending it directly to their relative, the platform provides the ability for them to shop for their relative anywhere they are in the world, and the money is split into different segments within our system and the Moduloop system to basically pay the different vendors. So this is a work in progress, and we've been working on it for 2 years. And it's great, while we are here, or we've been working with Jordan for a while, but because obviously of financial inclusion and the fact that we are also taking this whole project and putting it on blockchain for the trust factor, as that's one of the biggest issues that faces digital payments.
Excellent. One of the panel got together to talk, to prepare for today, and one of the things that came up across all the panelists and kind of all the issues that people have to be working through is in regards to identity, and in particular self-sovereign identity, or SSI as it's known from an individual perspective. Because if you think about financial systems, that ultimately is the consumer, that is the end game here, and it's an important part getting identity in these digital networks and systems correct, getting it right from the start as you build these networks of networks, right? We all know it's not just one blockchain to rule them all, or one platform that's going to rule them all. It's going to be networks of networks. And we'll talk a little bit about interoperability in a bit. But from an identity perspective, can the panel talk about the approach to identity for the use cases, and not only for people? People very often think about identity as a person, and I have a wallet, and this is me, and I can confirm it's me. But even for objects, you know, and Vima, maybe you can talk about this as well from a supply chain perspective. I think in one of the previous sections we talked about, you know, getting vaccines in through a supply chain and making sure that they're trusted and deliverable, et cetera. So maybe Daryl, you can start in the topic of self-sovereign identity at the individual and kind of how the credit union industry starts, and then we'll go back around.
Perfect. Yeah, one of the credit unions themselves, they're owned by their members. So it's not like a typical shareholder-run bank. The members are who the credit unions exist to serve. So there's this kind of logical fit. The credit unions have been helping in the self-sovereign identity movement for some time. What's interesting is we've stopped using the term. It's our members. One of the learnings we've had is the following: is because it's self-sovereign identity, it's about me. It's also about the credit union. The credit unions were always concerned to make sure that it really was you. Are you really Daniela? One of the learnings we had is that when you're asking a member, hey, Daniela, are you talking to Desert Financial Credit Union? The credit union wants to know it's you. That's the standard security approach. But because self-sovereign identity really is two-way, one of the surprising, was kind of embarrassed to be surprised at it, was that our members, without being prompted, you send out a survey with questions, and you ask her random text, and you never get any good signals out of it. But without prompting, we were overwhelmed with everybody saying, I am so happy to know it's actually my credit union on the other end. So this weird thing that we've leveled identity, as opposed to identity is something that the bank owns, something that Facebook owns. No, this is something I own, and I share it with the credit union. It's making things normal again. So when you walk into a credit union, people may know who you are. Now digitally, I know exactly who you are, and you know who I am. That's been our biggest learning so far.
Moses, do you want to go next? Talk a little bit about your use cases there.
Yes, you know, for us, definitely identity is a huge factor. Mainly, given that we focus or we play in the moving of money remittance from overseas to you know, Africa, and so what happens is that we have to make sure that the people that are receiving on the receiving end are the people that are supposed to be receiving those funds. And with what we are doing, since you have this whole split payment methodology, you could end up, you know, having different type of people, you know, different type of groups of people. From one, the client that's receiving the funds or that's receiving the service, to all these different small merchandise or small merchants and small businesses, which they range anywhere from, you know, a small mom and pop shop down the street selling mangoes to a bank, you know, or the government. So to be able to have a self-identity within these different groups is a huge factor for us. And it's one of the key aspects of making sure that we deliver a stellar service.
I think one of the things that was mentioned before is that trust level, is who do you trust, you know, and Daryl certainly mentioned it as well, is who do you trust verifying, you know, giving you that verifiable credential that you are a vendor in this network, that you are a person to do that.
Exactly.
Great. Excellent. Io, you know, from a perspective of, you know, how these systems need to be secure, and once again, the trust factor involved with identity, what are your findings and kind of your implementations shown?
Yeah, so I think we are in full support of, you know, customers and users controlling their identity. The problem though is that when you look at the systems that they interact with, let's say you're buying a coffee or you're using a digital payment system to receive a digital good, you're often revealing, you know, the merchant that you're transacting with, the amount, and individually those transactions don't paint a picture about your identity. But over time, when you look at, you know, those transactions together, they can, you know, they can be used against you. And so what we've been trying to do is build our protocol in such a way that we're decoupling transactions from the identity of the person making that transaction, so that you can verify the credential about who they say they are, but you don't necessarily link the transaction to that identity at any point in time. And so it's a unique way of looking at it, because it breaks every paradigm that we're used to, in the sense that I give you my credit card and my license, they usually happen at the same time. But like, you know, what we're saying is that we can decouple those two things, where I can give you a verifiable claim about my identity and attach a private payment to that, so that I can receive a digital good and not, you know, compromise my own privacy. And so that's kind of but it's really only possible with blockchains, but we're trying to also retrofit this to traditional fiat-based systems. But it's just a bit harder because the infrastructure is not there to facilitate such decoupling.
And we'll talk a little bit about the move to digital, right? A lot of this stuff, you know, blockchain specific projects and identity projects without a digitalization transformation, you know, projects, you know, it's great technology on white paper, right? Is what I like to say. But Veena, I know your thought of identity is, you know, slightly different. Obviously there's people involved in it as well, but, you know, kind of back office processes and supply chain. Can you talk a little bit about your approaches to identity in this new digital world?
So Daniela, on the enterprise finance side, it's an interesting, you know, case study where there is, again, within the enterprise, different people, you know, contributing to the transactions. And, you know, there are, as an example, you know, one of our customers, large manufacturing companies, you know, 100 different ERP systems. And intercompany transactions is a big issue. And, you know, in terms of actually managing the transactions, doing the reconciliations and finalizing, you know, all of that is a big issue. A business blockchain, you know, which is an intra company, where, you know, people have the access, you know, to the blockchain on the a shared ledger, you know, where they are able to again, you know, make some of these transactions in a very secured manner and in a trusted manner. That's a huge applicability that we see in the enterprise finance. It's more of a private blockchain. And in that case, you know, obviously from an identity perspective, there's a lot, you know, control within the enterprise, you know, where you have a private keys, and also at a transaction level, you know, not only can you have access to the blockchain, but who can, you know, really change what transaction, and it goes to, you know, identity and governance at a transaction level. That is one scenario. The other scenario is primarily between the company and its trading partners, or, you know, suppliers or customers. A lot of times in large companies, you know, when you have the supply chain, you know, you can have again, you know, a blockchain shared, you know, between the finance department as for the procure to pay or for order to cash, you know, purposes, you know, with your trading partners, you know, with your banks, you know, with your suppliers, with your, you know, customers. And in that case, again, you know, belonging, you know, to that particular blockchain, again, to be able to create that, you know, identification and having, you know, an identification that is separate from the transaction. So that is, again, you know, how do you be part of that? So large companies, many large companies on the manufacturing side, financial services side, are looking at, you know, again, deploying these kind of blockchains to manage the, you know, transactions in a very seamless manner. Remember, in finance side, you know, single, you know, source of truth is the most important thing. And people spend a lot of, you know, time, money, you know, energy, and, you know, capital, you know, to make sure that, you know, the truth is established. And that's where, you know, blockchain, you know, there's a tremendous opportunity for businesses to, you know, create those efficiencies and, you know, have that, you know, single source of truth established.
Yeah, absolutely. And it's really, you know, your point about it actually being an investment that people have been trying to do for a long time, right? Being able to create, this trust network, and now, the technology is there, and more so the need as well. And it's not, I think Moses just said before, it's not just about blockchain as well. There's tons of other systems that need to be worked on, and there's also additive technology from to add to blockchain networks, anything from artificial intelligence to IoT. Can you talk a little bit about specifically, as the move to digital in this new dynamic world, what are you seeing companies embracing that really is accelerating their approach of this?
Sure. So, again, blockchain is a technology, but at the same time, when you're looking at, changing a process or accelerating digital transformation, you got to look at it from a process perspective, right? And within the process, there are, you can embed several different technologies at different layers to create that acceleration. So while a blockchain, creates the trust and, the mechanism to share data, there are, other technologies, for example, artificial intelligence. Artificial intelligence, it can, basically you can read a lot of unstructured data and convert that into supporting information for the documents, for the transactions. As an example, if you have, an invoice, that you want to send it out to your customers, and you want to share it with your, trading partners, or with your, credit insurance, credit, invoice factoring. On this particular network, you're not only sharing the transaction, but you're also sharing a lot of documents. And, you can use artificial intelligence to be able to take a remittance advice, for example, read that remittance advice, convert that into a supporting, information for the document, and push the process forward in a lot more, easier manner. So, we use, quite a lot artificial intelligence, intelligence-related technologies to be able to process data and documents, to enable, more information on the blockchain. So a lot of preparation of the internal data before it goes to blockchain, you can use artificial intelligence, to do that. We also, one of our flagship, products that we have released recently is a digital assistant called Gia. Gia is, a finance-related assistant, which can sit on top of, the blockchain, which can sit on top of the enterprise, financial information, and can assist the CFO, assist the operations people, as well as the trading partners. So that's one way to use like artificial intelligence, where, you are actually interacting to be able to do the payments. You're interacting to ask for information. You're interacting, to, query for the information. And all of that, all of these different technologies can accelerate that. Likewise, predictive analytics, once you have the data on the blockchain, to be able to take the data and to be able to predict and forecast, what could be the potential issues, on a payment, for example, what could be a potential issues on, some sort of a discount, that is going to be claimed, or, some deductions that's going to be claimed, for a particular goods. Maybe there is, a potential of, some dispute on a particular invoice. So a lot of these predictive analytics, can be applied to the data on the blockchain and can drive the process in a lot more efficient manner, right? So that's what we do. And we see a huge opportunity of, bringing the technologies together, converging the technologies to create a solution on the process.
Excellent. Yeah. Moses, maybe, when we're talking about from analog to digital, there's, certainly in the emerging countries and regions of the world, this even becomes more, maybe of an opportunity sometimes, because you do, there's this green field, right? You went from I call it the Brazil syndrome all the time. You go from having no internet to people having better internet than folks here in North America as time. So Moses, can you talk a little bit about that migration, or that move from an analog to a purely digital world in certain markets?
Yes, absolutely. And this is a huge thing for upcoming markets. I mean, there are billions of people in the world that are unbanked. And the reason for that is, you know, the fees, the expenses that comes with, you know, banking, credit cards, and all that kind of stuff. So by initiating digital payments, companies have been able to basically change that whole paradigm to now everybody can be banked, right? For example, in Africa, when it comes to mobile payments, they are way ahead in the sense of that, you know, you can do mobile payments. You don't even need an app to do mobile payments. You know, everything is done through an SSD system, you know, USSD system, which is text messaging. So, you know, somebody can pay for uh, uh, school fees, or can pay for rent, or can pay down the street for a mango using a flip phone, right? And which means that changes the whole environment to everybody. If you have a phone, that phone becomes basically your bank account. So moving to the digital world has basically brought about the financial inclusion of billions of people that were really unbanked, and which now creates a whole different market, because now people can transact within each other. And this has been around, you know, in emerging markets for a while. Like, for example, in Africa, about 10 years ago, you'd be able, you know, you are able to go and buy soda from a vending machine using text message, you know, and that's kind of really cool when you think about it, you know, based on the environment that's there. But you know, you have the ability to pay every single thing. You know, you can even have a Maasai, you know, out in the wilderness, you know, with 1,000 cows, no access to you know, any kind of electricity, but they're able to pay for their school fees, their kids' school fees, on a flip phone, you know, for example, as long as they have cell reception. And this is all, it all came from moving from the analog type of format to more digital type of format, and it's being enhanced with different companies out there, you know, from M-Pesa to MTN. And so for us, it's exciting because we are able to plug into those specific digital payments, or different digital payments. And until now, it's been difficult to create that interoperability between the digital payments, but with Loop, you're able to do that as well. So it brings about, you know, a lot of different opportunities, meaning in emerging markets, they can also now start doing different type of online e-commerce type of solutions as well. So it's pretty
Absolutely.
great.
I mean, you know, I think that topic in itself is for like another 1 hour conversation around, you know, lessons learned, that a lot of these projects have been bootstrapped locally and through organizations like yourselves and I use, where you know, we need to start paying attention to a lot of this work already being done, because it needs to be replicated across various industries as well. Daryl, maybe you can add to that, because you know, the credit union space is a very interesting space in North America and worldwide as well, and maybe, you know, also let the audience know a little bit about why it's unique and why it's such a fantastic opportunity to create these networks.
Yeah, it's really interesting when you're in a room with 30 different credit unions. If there were 30 banks in a room, at some point when you leave the room, the knives are going to come out. They're there to kill each other. They're there to talk and stare and standards and stuff, but their business is made by cutting each other's margins and stuff. Credit unions are truly collaborative. What's been interesting for us on the digital front is we look at the global picture. I'm up in Canada. The non-American banking industry is typically further ahead. So the US banking industry is lagging behind a bit, and unfortunately, just due to budgets, credit unions are lagging behind them. So they're very, very slow to adopt technologies, partly because of just the how long it takes, but also because they're small. Their budgets are minuscule. So this has been an interesting opportunity to share the development of this digital identity. But what the biggest trend we've seen in the past 3 months, for lots of reasons, but COVID being the main, we've always been in the top 10 priorities for the CEO, CFO of the credit unions. But the minute that all of the branches shut down and their call center volume went up by 300 to 700%. And everybody went to go to digital, and credit unions they are not as big on digital, most of them. Digital identity became, other than the fact they had to prepare for loan losses and their income had dropped, we became the number 3 item, top priority, and they're now adopting it rapidly because the digital side removes so many problems, fraud. How do you identify a member if your branch is open when they come in wearing a mask? And when I say mask, in California, we've had chicken masks, not medical masks, a full chicken head. And somebody feels that they should be identified. Well, good luck checking that against your driver's license that no one wants to touch. So it's been a rapid shift.
Absolutely, yeah. And you know, in you know, some of this push to digitalization and kind of coming up with these new constructs that, you know, folks like CU Ledger has been working on for a long time, and others as well, is also looking at a lot of these use cases and requirements in financial services have, you know, just like in healthcare for, you know, as well, but have very strong regulatory requirements. And so the question to the panel, and maybe we can start with Ayo, we could start with you, is what are you seeing as an appetite for change in regards to regulations across things like cross-border payments, AML, KYC, that, you know, the audience here, as they think about incorporating these technologies into their products and projects, et cetera, should consider? Because I always like to say, whether it's blockchain or AI, the technology is the simple thing, quotation marks, right? It's really the legal frameworks, the regulatory requirements, that really, if you don't bring your partners in the industry and you don't bring your partners in the organization as a technologist to address these things, you will fall flat. It will be a much harder project to do. So from a regulation and appetite for change, I'll start with Ayu. You could start, go around the board. What do you see? And just before we go to do that, we have about 10 more minutes. I would like to ask that people go ahead and put their Q&A. I'll start watching the Q&A, and we'll, after this question and we go around, we'll jump into some questions that the audience has. So Ayu?
Yeah, so I think for us, the first thing was understanding the laws that businesses have to satisfy when considering digital payments and the privacy technologies that might be available for them to adopt, and why they would adopt it. So what comes to mind is like GDPR, which focuses on protecting consumers in Europe. We're finding that, you know, in that environment, you know, having a technology like ours is really advantageous because the businesses aren't actually collecting the information that would violate, you know, GDPR, and so they're able to, you know, still collect their fees and not basically store in a database the identifying information that, if hacked later on, would come back to bite them. In the West, it's obviously in the U.S. it's a little bit more unclear where we are on that spectrum. Although things are changing in terms of, you know, lawmakers, you know, speaking up about the need for, you know, private transactions on public blockchains, as an example, and for, you know, things like cross-border payments and remittances. You know, in those particular contexts, you know, you have payment processors that are seeing a lot of volume and are kind of sitting on this treasure trove of information about, you know, global users, and, you know, if they're not safeguarded, they could potentially, you know, cause problems down the line. And so the regulations are catching up to be able to, for them to operate safely. The other side of it for us is obviously, like, we don't want to have too complex of a solution to provide privacy, because if it's not usable, then it's not really helping. And so what we're trying to figure out is, how do we get efficient, you know, private payments that allows regulators to essentially check that box, that, you know, the business is doing what they're supposed to in terms of protecting consumers, and they're able to, you know, move forward in terms of making profit.
Right, which is why it's so important to bring those regulatory bodies on board, right?
Exactly.
You know, have them, you know, basically be watchers within these networks as well. Veena, you want to address that as well?
So again, you know, a couple of things related, right? So on the finance side of the business, you know, in fact, most recently, Deloitte, you know, did a, you know, survey for all the CFOs in terms of, where does blockchain, fit in, in terms of the digital finance transformation, and how regulatory constraints or audit, tax, compliance, all of those different things play in when you deploy, blockchain. And the general consensus, obviously, I think first and foremost, I think a huge process transformation is something that people need to look at internally before deploying some of these technologies. But at the same time, I think from a regulations perspective, whether it is GDPR or SOX compliance or some of these tax and audit compliances. These are all the things that people need to consider when they are building the blockchain systems, for internal use as well as with trading partners. But the general consensus is once these systems are built, obviously the benefits of these systems in turn is that you are going to experience huge increase in compliance, huge increase, in control, and decrease in cost. So that's the advantage, and definitely, according to this survey, about 77% of the CFOs out of the 1,000 that got interviewed or surveyed mentioned that their blockchain usage within their companies is something that they see imminent in the next few years, and they see huge value of having this common distributed tamper-proof ledger.
Right. I mean, maybe I've been in it for too long, but I like to think that eventually we're going to get to a point where, you land in a system or a platform, or you walk into your credit union, you go, whoa, this is enabled by blockchain, right? We hit a website, we don't say, whoa, what a fantastic database is behind this system. So I think we're certainly getting there as well. We have a couple of questions, and I'd like to start with Moses, with you from the Q&A, because we have 5 minutes left on the panel. And I will put my email address in the chat as well if anybody wants access to the Deloitte report, for example, that Vima mentioned, or any of these use cases. I'm happy to send along. But Moses, there was a question specific to what split payment systems were that you mentioned before, and if you can address that as well.
Yeah. So basically, we are working with a product called Moduloop. Moduloop is an open source interoperability system that provides the ability for different digital payments to connect within what they call a hub. And so the way it works is when somebody pays, you can do bulk payments, but it's either you can pay and create an all or nothing situation whereby when you send the payment, if it fails, it fails. It doesn't check. There's no that kind of credit card methodology, right? So we are using a system. We are adding our platform and integrating to Moduloop so that you're able to do split payment in the sense of that you're able to send one payment down the stream, and then that payment you're able to split it to different vendors, and not just vendors. When we say vendors, we mean merchants that are selling products, whether it's a small mom and pop shop or the supermarket, or even the government, for example, right? And this is where it's for us, when it comes to the governments, it's a huge thing because they're able to collect tax that way. Now the system will be able to split it will split the payments based on how it's set up within the platform, so that every single one of those receiver on the other end or recipients will receive their portion of the monies that is being sent automatically through the platform itself. And instead of right now, everything is done manual. One, if you send the money through, there has to be a communication between the first merchant and then the second merchant. And so you have different scenarios, and think about it, for example, in a situation where you're trying to help a family, for example, that need food in this environment, the crisis environment. And so you're sending the money directly to the family. You're sending the money to the family, but you're not giving them the actual money. You're actually sending the money through the system, and one of the companies that we're working with down there is able to basically split those payments to go do grocery shopping or pay for, any kind of, let's say health and safety items from the pharmacy. And so the system is able to basically split those payments into the different portions to the grocery, a merchant, to the pharmacy, to the small mom and pop shop, and to the government. You're able to split the payment 4 times without having to go back and forth, right? But in this scenario, if one of the payment fails, the whole thing fails, right? And then
yeah, no, I'm sorry. So it's reconciliation and efficiency, solving, the issues of getting that money through the system correctly.
Through the system, right? Without directly giving it to somebody, because the scenario here is that you wanted to help that person. However, you don't directly want to give them the money. You want the items or the goods or the services to be provided to that person. It's the same thing as a ticket. For example, if you're buying a ticket for a football game, right? You always have the team that's getting a percentage. Then you have the platform that's selling the ticket that's also getting a percentage. Then you also have the government that's getting a percentage. So in that kind of situation, the person that's paying for the ticket is paying one payment, but on the other end, there's different splits that have to happen within the platform itself.
Got it. Excellent. Jordan, it looks like we have how many more minutes to go?
Just 1 more minute.
All right. So, to sign off, there's actually a question in the Q&A about why is blockchain essential to your solution, right? Do you need to build it with blockchain? And the second part of the question is open source important? We'll like to do another panel at TiEcon about that issue, Jordan. Going around very quickly, 30 seconds, as you think about what you're building and what you're trying to achieve, why is blockchain essential to doing that? Vina, we'll start with you, and then go Moses, Ayo, and end up with Daryl.
Okay. Whenever transactions are going, intercompany or intra-company across, to different trading, partners, there is a big question of truth and, the sanctity of the transaction. And that's where, you can use blockchain to create the trust in the transaction. Well, that's when you use, a blockchain, right? Eliminate the burden of constantly verifying the transaction, and reconciling the transaction, and then to be able to do the process. So remove all of that and build a trusted network to share transactions, that are, again, immutable.
Yes. Yeah, trust. Trust is the biggest factor for us. When you're doing a transaction, a single payment to multiple, payees, you are dealing with, the concept of knowing that the split happened right, and the people on the other end received, their funds the way they were supposed to receive them, and make sure that it's all recorded. So trust is a big factor, and that's why we are incorporating a blockchain to make sure that we have all this recorded in the ledger.
To add to what Moses and Vina has said, I would say ownership of data, ownership of identity. Apologies, Daryl. And also just this whole shift to Web3. I think, blockchains kind of gives us the infrastructure to be able to do both, in addition to trust and security. So trust, security, ownership of data, and ownership of identity are why, to me.
Cool. And I would just certainly the blockchain is crucial for what we do, in that we have to at some level get down to a root of trust that we can all agree on. No matter how big your centralized system is, there will be someone who can't get into it or doesn't want to get into it. So the blockchain helps us there. The open source side, we look at it as really 2 factors. One, we want the transparency of the platform. We want a lot of eyes on that platform. But second, especially for the credit unions, we know we can't do it alone. So we're happy to participate, to contribute, whether that be direct code, whether that be testing, whether that be deployment and use cases and business information. So that's really, for us, yeah, blockchain and open source are both crucial.
Wonderful. I want to thank the panelists. I think the key things as the audience thinks through how do you accelerate digital transformation in your organization or as parts of the products that you're bringing to market. Trust certainly is a big indicator here. Transparency. And also, making sure that the other parts of the organization that you're building and the solution that you're building, whether it's the regulation or the legal and the people, don't forget the people. Usability in these trust networks are about the people, and we need to make sure that we focus them on as well. So thank you all, panelists. Thank you, Jordan. Thank you to the TiEcon attendees and to the event producers. We really appreciate your time. And once again, any questions, any additional information that you need, I'm going to just go ahead and put my email on here. And thanks again.
Yeah, and thank you, Daniela,
Thank you,
and all
Daniela.
members of the panel, Moses and Vina and Daryl and Ayo. It's been great having all of your perspectives and enlightening us with your experiences and your expertise. And looking forward to seeing you all again at another TI and TiEcon event. So yeah, thank you so much.
Thank you.
Thanks,
Thank you, Jordan.
Thanks, everyone.
Thank you, Daniela, and thank you, TiEcon.
Thank you.
Bye, guys.
And don't forget, for all the attendees, that the next Road to TiEcon event will be Wednesday, July 22nd. And so that's next month. And then TiEcon itself, which was supposed to be in May, is now going to be September 2nd and 3rd. So 2 more great TiEcon related events that are coming up in the next few months. So if you enjoyed this session and the other sessions here, please join us again. And we look forward to seeing you in the months ahead. And so stay safe and keep thinking about all the great technology that's going to take us forward into the days ahead. And so thanks again, everyone, and goodbye.